And before launching my presentation, I would like to pronounce myself at first. And here I am Mahabbat Hosen, lecturer, Department of Accounting, Government Hosen Sorority College, Magura. And today I am going to take a session on accounting. And today's topic is General Journal. It is discussed on chapter 2. So dear learners, let's go to the slide. I must not prolong my speech regarding this issue. So directly, I would like to introduce with the topic of today. At the end of the session, the learners will understand about the primary concept of the books of originality. That means the books of primary. And second one, they will understand and they can prepare about the procedure of a journal. That means how to prepare the journal entries and how to record in the books of accounts. Dear learners, you are watching. One man is receiving a product and another person is receiving money. That means here there is an exchange of transaction. That means a transaction is happening. Am I right? And another picture is showing that some transactions, that means the transaction is recording in the books, and this book is name is journal, books of a journal. That means it is the books of primary. So here the transaction is happening, and in this case the transaction is recording in the books of primary. That means journalizing. Okay. Now the question may raise in your mind, what is the journal? What is journal? It is a book on which the respective transactions are recorded according to the date and by explanation of both debit and credit. That means the books on which the transaction will be recorded according to the sequence of date and by explaining the debit and credit. Okay, now journal is the books of accounts for all day-to-day business activities are recorded in chronological order, that is date-wise. Hence, it is called as a day book, that means the book of primary. Now, what are you observing? A product is exchanging by sacrificing the amount of currency. That means one person gives, is intended to give the currency, and another person is willing to receive the product. So transaction is happening. Am I right? In another picture, this picture is in front of you. This picture indicates the transaction is recording in the books of primary. Okay, so it is called journal. The word journal has come from the French word jar. French word jar. It means day. That means journal has come from the French word jar. It means day. Okay. Now, this is the format of a general journal. Number 1 indicates date, and number 2 column indicates the names of the accounts, and number 3 indicates a reference. That means number 3 is the ledger phase, and number 4 indicates debit amount, and number 5 indicates credit amount. Okay, so this is the format, simple format in front of you. 1, 2, 3, 4, 5. 5 columns are exist in a journal format. Am I right? Okay. Date, name of accounts, ledger page, debit amount, and credit amount. So now it is time to understand, before starting or before recording the respective transactions in the book of journal, we will just recall the debit credit rules, and only 1 minute is required for understanding. Okay. Assets and expenses. Assets, expenses means expenses, and assets also here. From assets we have extracted the word shop, and from the word we have extracted the alphabet ball. From assets we have extracted the alphabet shop, and from expenses we have extracted the alphabet ball, and combined the word is shop. So if shop increase, it will be debit. If shop increase, it will debit. On the other hand, if shop decrease, it will be credit. Okay. If shop increase, it will be debit. If shop decrease, it will be credit. Dear learners, look very clearly. Capital means more. Liability means a dollar. Income means R. That means from the word capital, we have extracted the word more. From the word liability, we have extracted the word dollar. From the word income, we have extracted the word R. Okay, not word, actually alphabet, am I right? Okay. So combinedly the alphabet is called Adam. Okay. So now if Adam increase, it will credit. If Adam increase, it will credit. If Adam decrease, it will be debit. That means shop is totally reverse of Adam. Shop is totally reverse of Adam. So this is the system of debit and credit. That means the golden rules of accounting. It is called the golden rules of accounting. Okay, dear learners, now we will observe very clearly and we will record some respective transactions according to the example. Okay. Some important items of transactions we will see and try to understand. These transactions are usually come into the examination. So now, transaction 2020, not 2010, 2015. Okay, just you will understand. It will be 2015. Okay. Mr. Ratan started his business with cash amount 20,000 and with 25,000 taka furniture on 2015 January 1st. So for this reason of being, the journal entry will be cash. Cash has increased. Cash has come into the business. This is why cash will be increased. Am I right? Cash will be increased. That means asset has increased. Side by side, furniture also an asset. Asset has increased. So it will be debit. We know very well, if assets increase, it will be debit. On the other hand, capital. If capital increase, it will be credit. So according to the golden rules of accounting, assets means here cash, assets means here furniture, and on the other hand capital means capital. Okay, so assets 20,000 taka, furniture 20,000 taka, combinedly for the capital 45,000 taka credit. Asset debit and capital credit. Okay. So now the transaction 2 and 3. Transaction number 3, that means on January 3, purchase product in cash, taka 20,000, taka 20,000. So purchase is an expenses. If expenses increase, it will be debit. If expenses increase, it will be debit. Cash is an asset. If any asset increase, it will be debit. If any assets gone out from the business, it will be credit. So here, expenses have increased. So purchase is an expenses. So purchase will be debit, and cash has gone out from the business. Cash has decreased. This is why cash will be credit. Am I right? 20,000 taka. Okay. On January 5, purchase product not in cash, purchase product on account. So purchase means expenses. Expenses increase, so expenses will be debit. Expenses will be debit. Side by side, as we didn't pay the amount, so we have to pay the amount, so the liability has increased. Here liability means accounts payable. Liability means accounts payable. So if any liability increase, it will be credit. So this is why purchase will be debit and accounts payable will be credit. Am I right? Okay. Transaction on January 4. Sold product in cash. Sold product in cash. That means it is our revenue. Sold means revenue. Revenue has increased. So if any income increase, it will be credit. So sold will be credit. Now the question, whether the cash amount has come into the business or gone out from the business. The cash amount has come into the business. That means assets has increased. Am I right? Assets has increased. So assets will be debit and revenue will be credit. Here assets means cash. Here revenue means sales. Here revenue means sales. So cash debit and sales credit. How much amount? 20,000. Okay. Now on January 6, sold product on credit, not in cash, on credit. So sold means revenue. Revenue has increased, so revenue will be credit. That means sold will be credit. Sales will be credit. Side by side, the respective amount has yet not been received by the company. So we will receive the respective amount. And when the question will come to you, the amount we will receive, it means accounts receivable. It means accounts receivable. It is just similar to asset. You have to keep in your mind, it is also similar to asset. So accounts receivable will be debit. As assets has increased, side by side, revenue has already increased. So sales revenue will be credit. Accounts receivable debit and sales will be credit. Okay. Now the transaction on January 7. On January 7, the purchase products has been returned to the respective party. How much amount? 2,000 taka. As purchase is debit, so purchase return will be credit. As purchase is debit, so purchase return will be credit. Now the question, it was in cash or on account? Now here, it was on cash. It was on credit. That means it was on account. This is why we have to write down purchase return credit and account and purchase return. Purchase is directly related with the account receivable. So purchase return. will be accounts payable. Purchase return is related with accounts payable. So accounts payable, that means liability will be decreased. Liability will be decreased. If the liability decrease, it will be debit. Am I right? If any liability decrease, it will be debit. So accounts payable debit, and side by side the purchase will be credit. So now accounts payable debit and purchase return. As purchase debit, so purchase return will be credit. How much amount? 2,000. Okay. Now the respective amount of product we have already set as a return. That means sales return. As sales debit, so sales return will be credit. Am I right? As sales debit, sales as not it as right. On January 10, provided salary to Mr. Shine, provided salary to the Mr. Shine in cash. Am I right? So, as salary is an expenses, so salary has increased, expenses have increased. So salary expenses will be debit, and the respective amount of cash has gone out from the business. So this is why salary expenses debit and cash will be credit, as asset has gone out from the business. Am I right? On January 12, a check has paid for advertising expenses. A check has been paid to the party for advertising expenses. Advertising expenses is an expenses. As expenses increase, it will be debit. And we provided the amount through check, that means through bank. So bank will be credit. Am I right? So expenses debit and cash amount has gone out from bank. So bank will be credit. Okay. Now on January 14, we received 5,000 taka as rent revenue. We earned a revenue 5,000 taka as a rent revenue. So we know very well, if any revenue or income increase, it will be credit. And if any assets come into the business, it will be debit. Cash amount is an asset. And rent revenue, it is a revenue, so it will be credit. It has also increased. So assets has increased, side by side, revenue has increased. So if any assets increase, it will be debit. If any revenue increase, it will be credit. Now, received a check as a commission. So commission also a revenue for the business. Here commission also revenue as a business. And we have received this commission by a bank, that means through check. So commission as a revenue, it will be credit as it is increased, and side by side we receive amount from bank, so bank will be debit. So bank debit and commission credit. It is an asset and it is our revenue. Asset has already increased, side by side revenue has already been increased. Okay. Now look very clearly so that you understand the transaction norms. Transaction on January 16. Transaction on January 16. Purchase of furniture. Though the purchase has right down here, but it will not be considered as it is an asset. We know very well, asset means the respective economic resources from which future benefit can be derived, and it will be stayed on your business more than one accounting period. In that particular case, the word purchase will not be considered. That you have to consider the main word, that means the furniture. So furniture is an asset. Furniture has purchased by 15,000 taka. So as assets has increased, so asset will be debit side by side. The cash amount has gone out from our business. Here cash also an asset. We know very well, if any assets come into the business will be debit, if any assets going out from the business will be credit. So furniture debit, and on the other hand, cash will be credit. Am I right? On January 18, purchase a machine, sold a machine, taka 10,000. Now what will you do? You have to do in this way. That means asset has gone out. Which asset has gone out? Machine has gone out from your business. Am I right? So machine will be credit in this case. And for selling this machine, the business has received the cash amount. So cash is an asset. Cash has come into the business. So in this case, cash will be debit and machine will be credit. That means one asset has come into the business and another asset has gone out from the business. So the asset has come into the business, it will be debit, and the assets which has gone out from the business, it will be credit. Am I right? Okay, dear learners, I hope so you are understanding very clearly. Okay, now look, on January 20, withdraw money from business. In that particular case, you have to write down, withdraw is an expenses. So as expenses increase, so withdraw will be debit, and from which we have drawn the amount from business. This is why the cash has decreased. So expenses have increased, expenses will be debit and assets will be credit. Here expenses means withdraw, and the assets has only decreased. This is why cash will be credit. Expenses increase and cash decrease. Am I right? So withdraw debit, cash credit. Look, that on January 22, withdraw amount from bank. Now here there is a difference. Draw bank. For drawing the bank from bank, what is happening? That means cash amount has come into the business. Cash amount has come into the business. This is why cash will be debit and the respective amount has decreased from the bank. This is why bank will be credit. So the question, cash will be debit and bank will be credit. Okay, I hope so it is very clear to you for understanding, for better understanding. Okay, now dear learners, this is all for today, and the respective tasks I am going to submit in front of you. The home task as a single way. This is the question to you. Just you will try your level best to solve the problem by maintaining the sequence of debit and credit and chronological date. I hope so. This question is very easy. It is matter little to you to solve the problem. If you follow my previous classes, is very clear and I explain very clearly about the rules of debit and credit. It is the lecture that is going in front of you is number 9. So previous 8 class you have to follow. I hope so you will understand very clearly. Dear learners and my dear students, this is the part of evaluation. Now tell me, by debit, which respective below items will be affected? Either assets and liability will be increased, or assets and liability will be decreased, or assets will be decreased and liability will be increased, or assets will be increased and liability will be decreased. You are right. By debit, the assets will be increased and liability will be decreased. So the answer is C. Am I right? Okay. Now, number 2, an accounting cycle, which is the part of your will. That means not mandatory. Can you tell me? Either journal, trial balance, or ledger. It will be the worksheet. It is not necessary to prepare. Without preparing worksheet, you may complete the income statement and side by side you will find out your income, and side by side you will prepare the balance sheet by which you can realize the position of the company, financial position of the company. That means the position of the capital liabilities and honor security at the end of session, that means at the end of accounting period. So another part is in front of you. This is the question of explanation. That means it is knowledgeable part. The word journal has come from the French word dash, that means jar. The word journal has come from the French word jar. In a journal, in the books of journal, there are 5 columns that exist. Am I right? 5 columns that exist. Okay. Jar means a day. Jar means a day. Okay. Now it is the part of realization. Okay. That is, what is the door of accounting? What is the door of accounting? The bill of lading is, that means in what journal we'll consider the bill of lading. Okay. Now it is the part of your home task. Okay, my dear learners and beloved students. You will try your level best to prepare 10 journal of purses and 10 journal of sales related, which are very common to you. Okay, I hope so. You will try your level best at your home, and you will set yourself as a real man of tomorrow for doing any types of assignment tasks. I am expecting that you will do your respective tasks that I am submitting in front of you, so I must not prolong my speech today. Wishes with the best of luck. Thank you. Thank you all for staying with Mahabbat and taking our patience for a long time. Thank you. Thank you all.